Hey everyone, this is Addy. So I just thought about making a really simple beginner trading strategy. So anyone who's just starting in options trading can follow this and hopefully start the journey together. Now here's a very simple strategy. If you're just starting or if you started in the past and you have no direction right now, you don't know where you're going, your long option straight trading strategy is not making any money, this is where I would start and tilt and lean towards. I'm a pure option seller. I believe selling options is a mathematical game, and you have a higher chance of making money by selling options, not buying them. Anyway, really quickly, I'm in Russell 2000 right now. Here's my checklist of things that I do before I take a position. I will select a symbol, then I will go into the charts option here. I know it has dropped quite a bit, and it's trading around 2000 level, somewhere around 2050, and that's where it's been all year long almost. So if you look at this line here from December last year, it has been, around this, it's hovered around this mark. Anyway, so here's the rationale. Volatility has ticked up quite a bit, and this is my volatility tracker here. It has ticked up, it has come down a bit, but it's still higher than average. On a regular basis, you see 20% here in implied vol. Right now it's 32, meaning the options are juicier right now. They're providing more premium. So here's the trade. Now also remember that these futures are basically big products. These are designed for institutions more than retail traders like us. But because there are options on these, which are very liquid, we can trade these underlines. I'd be very careful, when I'm buying these futures contracts, because let me show you this. So here are the margin requirements of all these futures contracts. Look at this column here, initial margins. Now this is if you want to buy an outright future. So let's say I'm in Russell, E-mini Russell 2000. If I click on this, it brings me to this screen. My quantity level is 1. Don't worry about these tick sizes. I will make a new video of that, of each product with their tick size. But Russell trades in $5 tick sizes, and it's showing me that the margin requirement is 79.20. Meaning, if I want to buy this, look at this on the bottom here. I have one contract to buy, and if I go confirm and send, here's the buying power effect. Now I'm in my simulated trading account. You will pay some commission, $2.25 to get in, and then $2.25 to get out of this contract. But then your buying power effect will be 79.20. You have to put this much money down. Anyway, this was just for education. Always remember that these futures contracts are big products, and therefore you stay very, very small when you trade these. Now here's the thing: there are 2 expiration cycles in September with 43 days out. Now, why am I not trading this week 3? Because look at the volume and open interest here on these columns here on the right. The last 2 columns. I hope you can see these columns here. There's literally nothing going on, and I do apologize for this. I think I missed it. So yeah, there's nothing going on here, and therefore you always want to be where the liquidity is. Now compare this with this chain, which is AM settled. Look at these. Look at this open interest and volume. Better. Not really great, but better if you want to trade it. Look at the bid ask as well. Now, 1990 versus 2030, that's a 40-cent bid ask spread. Go into one of these, go to the same strike, 1875, 1710, $20. That's $3 out. So I would never touch that. I did make a mistake of getting into this expiration cycle once, and it was a nightmare to get out. You just cannot get out without paying a lot of bid ask spread. Anyway, long story short, let's just take a position. So I'm going to go my regular 60 deltas. That's my sweet spot. There are 100 contracts that are already traded, open interest in this strike. There are 5 which have traded today. That's what the volume section is. Volume is today, either sold or bought, meaning people have either bought this strike or they have sold it. Both count towards volume. Open interest is how much open interest there is, either long or short, and that's where the open interest number comes from. Anyway, quick setup. I'm going to trade a put spread. The ticker has gone down quite a bit, and I'm going to make sure that I take advantage of this high volatility environment by going $25 out. I normally go $25 in the Russell and $20 in the ESE minis. With $25 because that's the only strike that's available, first of all. But then you do get, when it comes closer to expiration, you will get more strikes will open up. But right now, they're all $25 out. So anyway, you don't have an option. I'm going to go analyze the trade. And here I will go onto the risk profile and look. This is a nice chart. This is what I like seeing when I trade an option. Always set your slices to break even to the date that you're trading, the expiration date. Make sure this date on top is also the same date, because if it's not, then you will not get the right chart. The chart will be all over the place. Anyway, 83% probability of profit. My max thing is 145, and I'm collecting $2.90 here. Because it's a simulated trading account, I can go and do. I think this will get filled. These are not real prices. This is just going to get filled, I believe. If it doesn't, then we can just adjust the price down a little bit to 280, whatever it is trading. Let's see if this gets filled. There you go. So I'm going to collect. I've collected 140. My max profit is $140 on this. Now, if you want to see how the trade looks right now, go into the Analyze tab, select it. $140 max, and I paid some commissions to get in, and there'll be more commissions to get out of this trade. $1,110 max loss, and then let's see how it goes. And then I have some adjustment techniques, meaning if it goes up, obviously great. If it goes down, I'm going to convert this into an iron condor, and then sit on it. Now I have 43 days left. I'm going to think about closing this at either 50% profit, max profit, or closer to 15 to 20 days to expiration. My sweet spot is around 18 days, 20 days, sometimes 15 days. And I will move these strikes. If I haven't reached my profit goal or my profit target, I will move these strikes into the next expiration cycle and then continue the trade like that. But we'll cross that bridge when we get it. When we get there, for now, it's a nice, super simple credit spread in Russell 2000. Thank you very much.